there. So that's a first step in ensuring that the financial underpinnings are there to accomplish what the city needs to do in the area of drainage. You do have some decrease in capital outlay there, but again, we're trying to build a foundation to go forward so that when we come to you and request capital projects, there's good data there, good information about the condition of our system and the work that needs to be done to bring it up to the standard that's required in order to adequately handle the kinds of rainfall events the city experiences from time to time. In information technology, the biggest change there is that we have some cost increases intended to pay for in the operating area the enterprise financial system that we need. We'll start paying for that be paid for over a period of time. Expansion of the fiber optic network and the city's municipal network. All of those costs are built in. One thing I did want to indicate in the Information Technology Fund, as well as in one of the other internal service funds, we're using a good bit of fund equity that shows up in the revenue on the previous slide. These funds are internal service funds. They really shouldn't be building up money in those funds. It means that they, in prior years, have overcharged the operating departments for their services. So we're using a good bit of that, but bear in mind too that there won't be as much money available there next year to help fund this, which means you would have more costs that would flow back to your operating funds, including the general fund. And the risk management fund, we have just gone through bidding out our insurance coverages and received a very favorable bid, which we have reflected in this budget. So you see a decrease there in the total cost of some $173,000 compared to the prior year. Likewise, there's a decrease in operating expense, an overall decrease of 7%. Building maintenance fund is another area where we're using a lot of fund balance. See the last line there on the revenues. Again, there won't be that much available next year. There'll be some, but not that much. And it's reducing the impact on the general fund as well as other funds. In the expense area, the biggest thing there, in addition to the personnel costs, which is primarily just the pay adjustments that the council has indicated we want to make, we have a couple of capital items: replacing the fuel canopy at the old police department and repairing a concrete wall and some stucco at the new police department building. In the general fund, we're looking at a 4% increase overall, 3% increase in current property taxes. Utility service tax is up 4%. We expect another decrease in communication service tax. I think that as a result of the competition in the cell phone market and related services and driving down costs. That you can see that's been a trend that's been going on for a while. We expect a substantial increase in franchise fees, and with the economy recovering, we're seeing an increase in projected state revenue sharing, which is primarily sales tax. We are reducing the use of fund balance. In the current budget year, we used $1,243,000. For the coming year, we're suggesting $1 million. We fully expect that in the current year, when we get to the end of the year, we will finish the year with a surplus of something in excess of $1 million. So by using this $1 million, you're not really dipping into the surplus you've built up in prior years, your fund balance. In the general fund, just to see it graphically, the property tax is only 1/3 of your revenues. However, the property tax is what you have control over. It's basically the only thing where you have some flexibility. Everything else is pretty much set. You have a little bit in the other category for fees and things that you can make some adjustments in, but primarily you have to look at property tax for any additional revenue that you might want, or you can look to appropriated fund balance. But we're looking at a total overall of $33,304,000. In the expense area, again, we're looking at 4% increase, and I'll go through and talk about some of the different changes. Most of your expense is for public safety. 61% is a combination of police and fire rescue. Everything else is the remaining 39%. Major changes. We have the partial implementation of the recommendations in the CODA report, $420,000 for partial pay and classification implementation. This is working toward the Council's goal of having pay that is competitive in the Volusia market. We're also reducing transfers to fund internal service funds. We are working to simplify the city's financial structure, and that is one of the things that we need to do. We can't do it all in 1 year, but we are working in that direction. I know the finance department staff with the city manager will continue to work in that direction. In the mayor and council budget, we have $20,000 for an internal audit. This is something that was brought up in your goal setting session. It's something the city has done in the past, contracting with a firm to do an internal audit of some particular area of the city function in which you have an interest or that you would like to be reviewed very thoroughly. In the city manager's office, the special assistant, which previously was split 50% CDBG and 50% in the general fund, said really if you look at his workload, it should be 70% in the general fund. That represents an increase of $18,000. And then the city's newsletter that we put out quarterly was being funded in solid waste, and we have moved that to general fund, put it in the manager's office, which is where I believe it belongs. The council has talked a number of times about the need to reinforce the city attorney's office to enable that office to handle the city's legal affairs more expeditiously. In response to that concern, we have added a second city attorney, have $77,000 a year. Some of these figures are based on 12 months of salary, and at the council's direction, we have reduced all those to 11 months. But those reductions don't show up in the slides I'm showing you right now, but they have been made. If you look back in the budget, you'll see a little bit less. In finance, we're adding a couple of different positions. A purchasing coordinator. We need a second person in purchasing that is at a professional level above the clerical level, both to enable that office to do everything they need to do, as well as to provide backup for your purchasing manager to be able to step in and if there's a transition or if the purchasing manager's out for some reason, you need to be able to continue moving things along. The other thing that we intend to do is there are certain functions now that are being done in the finance department by other personnel that we want to move to the purchasing office, as far as monitoring contracts, monitoring expenditures based on council authorizations, and we want to move those. Our goal this year at some point is to move payroll out of human resources and back into finance.